Hello, Katrina Bullock for the Finance News Network, and joining me today from Australia's largest pure-play office REIT, Centuria Office REIT, is Fund Manager Grant Nichols. Grant, welcome to FNN.
Thanks for having me.
Now, before we jump into the full year 2020 results, could you start by telling us a little bit about how the REIT is positioned in the market?
So COF seeks to position itself as providing quality, well-connected and affordable office space. We do this by owning a geographically diversified portfolio of 23 assets that is mainly invested into metropolitan, near city and secondary CBDs like Canberra. The benefit of investing into markets like this is that we can attract large quality tenants with around 80% of the income that we derive from COF coming from either government, ASX listed or multinational corporations. Another key component of the COF portfolio is the average age of building being around 16 years, which is very young for an office portfolio. The benefit of having a young office portfolio is that you have lower operating costs, greater efficiency, and it's generally more attractive to tenants.
Now moving on to the Fund's 2020 full year results, could you talk us through the performance highlights?
So Funds from Operations, or FFO, for the full year was 18.6 cents per unit. We also distributed 17.8 cents per unit, which was in line with guidance for FY20. During the year, we also did a lot of work to strengthen our balance sheet, with gearing at 34% and undrawn debt facilities of about 130 million as at 30 June 2020. On the portfolio side, it was another good year in terms of leasing, with over 10% of the portfolio leased during the course of the year. This maintained occupancy at over 98%, with a WALE of 4.7 years.
So what impact did COVID-19 have on today's results?
The COF portfolio was very resilient during the COVID-affected period. In terms of valuations, the NTA at 30 June was $2.49, which was the same NTA that we had a year earlier at 30 June 2019. So the reason why valuations didn't materially change is that there remains robust demand for quality real estate that produces ongoing sustainable income returns. Now, looking through at income itself, during the course of the COVID-affected period, being April to June 2020, we maintained rent collections well over 90%, which is a testament to the quality of the tenants within the COF portfolio.
So throughout the COVID-19 period, there has been a spotlight on office REITs as an asset class, given that there are more workers naturally working from home. So given this, what do you think the impact of COVID-19 is going to be on office properties?
So I think there are ongoing question marks in regards to working from home, particularly into productivity and maintaining a strong corporate culture. In regards to maintaining a strong corporate culture, it's a very difficult thing to do when there is no unstructured interactions and when then a large proportion of your employee base are working from home and are isolated from their other employees. In regards to productivity, working from home can be very inequitable. So it can work okay if you have an home office environment, but particularly for younger staff that may be living in a share house, it's very difficult to maintain productivity when you could be working on the edge of a bed with a laptop. So we also think that COVID-19, from an immediate perspective, will turn tenants' focus towards affordability and the health of their office accommodation. From this perspective, we again think that COF is well placed, given that COF provides quality, affordable office accommodation, but also because we have younger, newer generation stock, as new buildings generally provide greater ability to provide social distancing, particularly in regards to lift usage.
And finally, what can Centuria Office REIT investors expect of the 2021 financial year?
COF starts FY21 in a really strong position, with occupancy of over 98%, a weighted average lease expiry of 4.7 years, and around 80% of the income derived from those high quality tenants being government, multinational or listed corporations. These high quality tenants will underpin the FY21 distribution guidance of 16.5 cents per unit, which equates to a very attractive distribution yield of over 8%.
Grant Nichols, thanks for the update.
Pleasure.